Hello, my name is Steve Bigelow with the Candlestick Forum. Got a couple recommendations, and it kind of goes under the category of observe the obvious. And the observe the obvious is made much easier using candlestick analysis. We had a very strong reversal signal in the Dow as of yesterday. Look at this is what we call a McMuffin. There's our morning star signal. That's one of your 12 major signals, a high probability reversal, followed by a doji sandwich, a bullish candle, doji, bullish candle, and a close above the T line. These are all very powerful reversal indications, except for one factor. You still need to see the signal confirmed. What we needed to see today was a positive open breaking through the downtrend of the Dow, confirming this signal. However, when we get up first thing in the morning and we could see that there was a much lower open, the pre-market futures were showing the market was opening lower. That was a good indication that we had failed to break through this downtrend, and that if they started selling off, we were still in a downtrend, especially if they closed back below the T line. So was this type of move expected? Definitely not. But the fact that they failed to come up through this level and failed to confirm the McMuffin, that told you if you were ready to go long, you kind of put those plans aside and still maintain your short positions. So that final requirement, as we saw over here in the NASDAQ also with a close above the T line, what's our next requirement? We want to see it open positive, confirming that they're staying above the T line. Once again, with the fact that they were gapping it down, that was a pretty good indication. They weren't going in this direction. This downtrending move and the markets were still in progress. Anytime we can see a failure, like right here, there was a nice morning star type signal, doji sandwich. It needed to open positive and trade positive, but they opened it lower. And one simple analysis from candlestick analysis is if there's a bullish signal and the next day they can trade it back below the open of that bullish signal, that tells you you're still in a downtrend. So with that, we had been short Carvana, covered the short positions, but notice what happened. They couldn't close above the T line. Now we've got a bearish J-hook pattern that if they start trading this lower, which would also be a function of the markets continuing to trade lower, this bearish J-hook pattern could still have an extensive downside. So if it opens lower and you're shorting, you don't want to see it close back up above the T line. Wayfair, you can see how it was showing potential reversal signals. There was your bullish harami. Once again, what do you require to show that a candlestick reversal signal is acting as a reversal signal? You need to see confirmation. The fact that they gapped this down and started trading back down below the open of that potential reversal signal told you we're still in a downtrend. That was emphasized by the fact that when you had that bearish kicker signal, that was a lot of force to the downside. And then the failure here at the T-line area doing a bearish J-hook pattern, probabilities are extremely strong. You're still in a strong downtrend. That'll be it. We'll see you in the chat rooms.